welcome to OptionPit.com, the morning volatility report. It is I, Andrew Giovinazzi, Chief Operating Officer, filling in for Mark Sebastian, who is out this morning. I believe he's doing Fox Business. All righty. Couple of things. We'll talk about iron condors, I think, today in our chat room. Read the blog on Friday, or all of you subscribe to it. It's a pretty decent blog, I think. Gets good readership. See what income generation is all about for all you Option Pit clients. This is free. Option Pit Live and above, yes. We give you more than you pay for. Again, this is methodology on short gamma positive theta trading. Right? How to look at these in risk control ways. It's a 3-hour webinar on Saturday. Okay. For all of you who are members, it will just be, it'll pop up on the schedule. For all new clients, it's $147. Okay. And it's actually, our class is filling up quickly. I think we have spots for 100 people. It's already halfway full. So so far it's our largest attended Saturday webinar so far. All righty, now off to the markets. We're starting to get into that mode of realized vol in the SPY is now 7.5%. All that volatility we had at the beginning of the year, where'd it go? Okay, that was October. We had a little dip in D's. We had this back and forth. And now we've got the familiar march of stocks when they're really, when the wind is at their back. 10-day volatility is starting to get down to those lows again. Apple's trading over 130. Making its big move. I don't know if anything's going to be able to stock that stop. Dave says, why look at the 10-day vol and say 20-day vol? Well, what I'm trying to say is what's been going on for the last 10 days. Right? What's been going on for the last 10 days? Nothing. So volatility recently, right, even through this Greek stuff, Russia invading Ukraine and all that crap over the last 2 weeks, has generated nothing for realized vol. Generally, that environment, iron condors, you still got a VIX at 15.5, right? So if you look at, let's just look at 30-day volatility. It was jumpy before that, and I think, with good reason. There was some interest rate worry. There was the Greek elections. They didn't know how Europe was going to, and all of a sudden, don't you feel like the market has shrugged those elections off for the most part, and it marched to new highs? I mean, you could hate the market if you want, that's fine, but all I'm saying is, well, yeah. What I look for is vol divergence, and I think that's what we're starting to see. Okay. We have had 30-day vol get as low as 9 here, and right now still trading at a pretty decent level. Right? That's what I'm saying. Operating away from the money has been the best consistent play over the last 2 months, and I don't see how that's going to change. You got 4 months of reprieve in Greece. You don't have any earnings coming out. I think you're going to have a pretty quiet week. We might even look at some butterflies. How much of the jump in VIX and RVX, like I said in our strategy letter update this morning, I would say almost all this jump is, it is almost that 7% move in VIX is almost exactly the weekend effect. Textbook. There's a little bit on the pullback. You got what do we have, about a 0.25%. So you could give maybe, 15% of the move, a fraction of the move to that. And the last thing I'll just say is oil is weaker as well, right? Yeah, still oil. The realized vol in oil, while it has come off significantly here from its highs, and again, implied volatility. So if we look at, again, we saw that size. We looked at selling Vega in here a while ago. It still seems like the best idea, but longer term. And I think we're going to explore a little more of that as well today. All right, so as far as Apple goes, I don't know. I don't think it's going to stop going up. And we did see, and another thing, you guys, if you notice, like from a weekend effect, you're seeing a markup in vol everywhere. But that's only really a paper mark. It's not, if you own premium, you're not going to see really any big change in your P&L from that. All right? All right, everybody. We'll mark us out today until the pit report. And on we go. I think we have kind of a snoozer, and stocks are just taking a break from their run to all-time highs. Wouldn't be surprised if one or two stocks took off a little bit. But for the most part, here we sit. And that's about it. All right, everybody. Have a good afternoon, and I will see you shortly. Bye-bye.